market cap king in the U.S. Nvidia overtaking Apple after those shares rose a little under 3% during today's trading. Going out to more decimal places, if you take a look at the Wi-Fi Interactive, Nvidia now at $3.431 trillion, Apple at $3.377 trillion. Of course, we also recently got the news that Nvidia is going to be entering the Dow, Intel exiting, so that perhaps helping to put it over the little finish line there.
Yeah, I mean, listen, Nvidia for a lot of investors is still the, they think the smart way to play the mega AI trend. I think as for Apple, they did report, revenue reached this all-time high for the September quarter, but I think there were still some questions out there for some investors. How strong is this iPhone upgrade cycle really going to be?
Yes, definitely. And we haven't heard from Nvidia yet, so there hasn't been room for people to be disappointed.
We shall see.
By those numbers, even if they come out ahead of estimates. We'll see.
Goldman Sachs analysts believe that Nvidia's stock is well positioned to maintain its superior performance, pointing out that there is no indication that the demand for AI-driven computing solutions would slow down. Ahead of the business's fiscal Q3 earnings on November 20, Goldman reiterates its buy recommendation on Nvidia after adding the company to its America's Conviction list. When compared to other companies under Goldman's coverage, analysts point out that Nvidia's present trading level, albeit being high, is still well below its previous 3-year median price-to-earnings P/E ratio, indicating potential for additional gains. The main factor supporting Goldman's optimism is Nvidia's distinct position in the AI infrastructure market. The rollout of Blackwell GPUs and the relaxation of supply-side constraints are the main drivers of the bank's prediction that Nvidia's fiscal Q1 in April would be a breakout quarter. It is projected that the combination of improved supply and new product offerings will result in significant positive EPS revisions. Analysts do, however, anticipate that Nvidia's Q3 earnings and Q4 forecast will support the company's long-term growth hypothesis. They point out that Nvidia's largest customers, Amazon.com, Microsoft, and Alphabet Incorporated Class A Meta, posted profits that showed steady demand for cloud and AI infrastructure. Even while these players' rates of cloud development varied slightly, they all agreed that supply, not demand, is still the limiting factor. In particular, Microsoft predicted that when more capacity is deployed, Azure revenue growth will pick up speed again. Nvidia's strong network of alliances suggests strong demand as well. The HBM revenue of SK Hynix Incorporated, a significant Nvidia partner, increased by more than 70% from quarter to quarter, demonstrating the increasing demand for high-performance memory that is essential to Nvidia's GPUs. Analysts lead by Toshiya Hari noted, SK Hynix spoke to good demand visibility going forward, supported by long-term contracts with customers and the fact that their HBM capacity is sold out through the end of CY 2025. They also addressed some worries over the durability of AI expenditure, pointing out that although Nvidia might experience a cyclical correction as businesses maximize AI capacity, this isn't anticipated anytime soon, especially considering the recent expansion of AI use cases. There is less chance of a major short-term slowdown thanks to recent advancements in a variety of AI applications, such as Google's engineering efficiencies and Amazon's cost savings with generative AI assistance. Estimates of capital expenditures from significant cloud service providers support Nvidia's chances even further. According to Goldman, the industry's cloud capital expenditure growth is expected to expand by 70% in 2024, 24% in 2025, and 11% in 2026. This is consistent with remarks made by major cloud providers like Microsoft and Meta, who anticipate more investment in the upcoming years to satisfy the need for AI. Early deliveries of Nvidia's next-generation Blackwell GPUs are anticipated in the company's next Q4, which will support the company's current Hopper-based portfolio. Goldman analysts stuck to their $150 price estimate for Nvidia, which suggests an 8% increase above current levels. A possible decline in AI infrastructure spending, limitations on GPU exports, supply chain interruptions, and lower-than-expected demand for gaming GPUs are some of the main threats to its thesis, they noted. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Hey there, Maddie. Yeah, this is a law that was passed with bipartisan support 2 years ago, but Republican comments in the final days of this election cycle have raised questions about the future of the CHIPS Act. You mentioned the House Speaker's comments over the weekend, but that came after former President Trump made these comments in a conversation with Joe Rogan on his podcast a few weeks ago.
That chip deal is so bad. We put up billions of dollars for rich companies to come in and borrow the money and build chip companies here, and they're not going to give us the good companies anyway. All you had to do is charge them tariffs.
Well, the CHIPS Act has unlocked nearly $53 billion in funding over the last 2 years to bring semiconductor supply chains back to the U.S. That funding from the Commerce Department has led to new manufacturing sites or foundries and expansion projects. You see them on the map there across more than a dozen states. And investors have been following this closely because those commitments have come from some of the world's largest chip makers. We're talking about TSMC, Global Foundries, Samsung, Micron, and Texas Instruments. Intel has been the biggest beneficiary of this law, with the Commerce Department committing $8.5 billion in funding to build out factories across 4 states. The problem is only one company has received the funding to date because the other firms haven't met the milestones they negotiated with the federal government. The Commerce Department has not disclosed individual terms with each company, although we do know some of those milestones are tied to everything from CapEx to commercial contracts.
After a strong start to the year that confirmed the existence of a bull market, the S&P 500 went on to set several new records. Following a 24% climb last year, the index is currently on track for an annual gain of 20%. Additionally, growth stocks, entities that typically have higher earnings growth than either their industry or the overall market, have taken the lead. But don't panic if you haven't made a significant investment in these stocks. There is still time to participate. Although the exact duration of this bull market is unknown, history indicates that bull markets often outlast bear markets by a considerable margin. According to First Trust data, the average bull market from 1926 to 2017 lasted almost 9 years, while a bear market lasted less than 2 years. Additionally, if you make long-term investments, your portfolio may benefit from growth stocks during multiple bull markets. Therefore, it's critical to make informed decisions. Which businesses are still excellent investments for stocks in 2024 and beyond? We should verify with Nvidia. Over the last 5 years, Nvidia has increased by 2,500%, and the momentum is still going strong. This year, the stock is expected to rise by almost 170%. What's all the excitement about? Nvidia is a major player in the rapidly expanding field of artificial intelligence, AI, which is currently valued at $200 billion and is expected to grow to $1 trillion by the end of the decade. The graphics processing units, GPUs, from Nvidia are powerful CPUs that can manage several tasks at once, which makes them perfect for important AI activities like model training and inferencing. To meet the demands of any business launching an AI platform, Nvidia has also created a comprehensive range of AI products and services. Nvidia's earnings have been rising in the triple digits every quarter, reaching multi-billion-dollar levels as a result of all of this. Revenue increased to $30 billion in the most recent quarter. Simultaneously, the gross margin has risen to astounding levels above 70%. This indicates that in addition to making a significant amount of money, Nvidia is also quite profitable. To maintain its lead and stay ahead of the competition, Nvidia also intends to innovate every year. Nvidia's stock is currently priced at 47 times its projected earnings. This isn't inexpensive, but given the company's current performance and prospects for continued strong sales growth, it appears extremely realistic. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Pat Gelsinger, speaking to Yahoo Finance, expressed his frustration about the timeline.
It's well over 2 years since the CHIPS Act passed. And over that period, I've invested $30 billion in U.S. manufacturing, and we've seen $0 from the CHIPS grants. This has taken too long. We need to get it finished. That said, we're working closely with the CHIPS office and constructively engaging with them to finish what we started.
Now, in addition to those grants, the CHIPS Act includes a 25% tax credit to those companies who are building out those supply chains. Gelsinger quick to point out the tax piece there is roughly 3 times larger than the grants, as he says, and the companies received a big chunk of that. Now, the administration has touted this act as critical to national security, in part because of where chips are manufactured today. You see that just 14% come from the U.S., while 21% are manufactured in China, according to the Semiconductor Industry Association. And while Taiwan makes up 17% of that pie, when you look at overall chips, it manufactures nearly all advanced chips today. The CHIPS Act, part of that plan to try and change that dynamic, guys.
Yeah, Kiko, it's certainly going to be interesting just seeing what the outcome of the election is, and then, of course, the impact that it's going to have on the CHIPS Act. I'm curious because Speaker Johnson was quick to walk back some of his commentary. So I guess how realistic is an appeal versus maybe more so a revision here to what we know as the CHIPS Act?
Yeah, Sean, I've been talking to a number of analysts who cover the industry asking this very question. They say that they don't believe there is a full repeal of the act, having said that there could be a change in the implementation of the law, and that could still have significant implications here for those companies we just mentioned. All of this, of course, depends on the makeup of Congress. As we said at the beginning, this was a bipartisan bill. Some would say this is all just sort of politics leading up to Election Day, but any kind of delay or change in the implementation of this could have some big implications. Speaker Johnson talking about potentially streamlining environmental permitting reviews there, although a lot of these companies do get exemptions from those requirements as it stands.
Nvidia's dominance in the artificial intelligence, AI, business is well known. These days, there is a great need for high-end AI training systems, and its AI accelerator chips are the best available. The stock of Nvidia is a clear wager on a sustained AI boom. It's not always a clear winner, and before purchasing these shares, investors should be aware of a few significant hazards. However, there is a universe in which Nvidia consistently outperforms the stock market. Let's quickly examine Nvidia's investment risks and what would be required to maintain its dominant position in the market. Indeed, Nvidia had an advantage over its rivals. Over 10,000 Nvidia V100 accelerators were used to train OpenAI's initial public version of ChatGPT, which generated 36 times sales or cash flows. This is the standard release for market performance. You see, during the ChatGPT era, Nvidia's stock has soared. Over the past 52 weeks, the stock has increased by 216% and by 928% over the past 2 years. With a market valuation of $3.4 trillion, Nvidia's stock is valued at a 74-fold premium to that of a new ambitious growth company with a modest market capitalization. To achieve this enormous market value, the business will need to generate amazing sales growth and profits for years to come. Any mistake made along the route could result in an abrupt decline in price, either immediately or after investors have had time to consider the long-term effects of bad news. The generative AI boom is causing sales, earnings, and free cash flow to surge, as the preceding graphic demonstrated. The company results are keeping up with the investor enthusiasm, and the valuation ratios are high, but far lower than when they peaked in the summer of 2023. Although you should be aware of the possibility of competition, Nvidia remains the industry leader in AI hardware. Both in the marketing division and the chip design labs, challengers have a lot of work ahead of them. As a result of a radical shift in the semiconductor business, Nvidia is displacing Intel in the Dow Jones Industrial Average Market Index. Additionally, the cash profits that come in won't be left sitting in a bank account. Nvidia has a lot of new instruments to maintain its dominant market position because its product development expenditures are suddenly among the most generous in the world. Thus, I can see why, despite numerous business dangers, Nvidia remains a well-liked investment option at today's high pricing. The company has an impressive presence in the AI field, and its substantial financial gains can support Nvidia's long-term success. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below. Click the link to my Telegram channel and join our growing community. Don't miss out on crucial updates that could impact your investment decisions.